back. You're still with us on Markets Today, and now let's go over through the rest of the headlines that we're tracking for you. So the fourth one is a compilation of all the stocks that were in the news. Let's start with KPIT Technology. The stock ended up with a gain of more than 8%, and this is after the company announced a partnership with Honda for software-defined mobility, SDV, software-defined vehicles. Well, increasingly, the software component in a car is going up, and now Honda has tied up with KPIT Technology to power their SDM roadmap till 2030. According to KPIT Technology, with Honda, they could be staffing close to 2,000 plus professionals. Why is the stock so excited? Because this is KPIT Technology's second deal in the software-defined mobility space. In November of last year, that's exactly 3-4 months ago, the company had signed a large deal with Renault, and now they're going to be partnering with Honda for the software-defined mobility aspect of their cars, and the street is quite excited with the prospect. The financials of this transaction are still not known, but you can see by judging by the stock reaction, 8.5% higher on KPIT Technology, the street likes the prospect and the fact that KPIT Tech is winning deals in this space. Let's move on now to another stock, Ramkrishna Forging. Now that gained over 6% in trade after Ramkrishna Forging and Titagarh Consortium emerged as the lowest bidder for a railway order. The company will supply around 15.4 lakh forged wheels over 20 years as per the agreement. Sonia is here with the details. Sonia.
Well, thanks a lot for that. So it's a 52-week high, and this is a massive, massive order that Ramkrishna Forgings has bagged. Along with Titagarh Wagons in a JV, they have bagged an order to supply under the Atmanirbhar Bharat project around 15.5 lakh wheels, and this supply will be over a period of 20 years. Now, I had a chance to reach out to the management to find out what exactly this would mean for the business, and the company told me that there's a total outlay of 1,100 crores. That is the investment that they would have to make in this particular project. It will be split between Ramkrishna Forgings and Titagarh Wagons. Out of that, the entire plant will take about 2.5 years to set up. So the project will take about 2.5 years to set up. Initially, they will need about 300 to 350 crores, and the rest of it will be attained through debt, low-cost debt from a European bank. Now, what does this mean in terms of earnings for Ramkrishna Forgings? The company said that they've got a guaranteed order of 80,000 wheels from the government. The total revenue from this project per year would be 2,200 to 2,300 crores, and they're currently putting up a capacity of 2 lakh wheels for this particular order. So it's a new revenue stream for them, orders of forged wheels from the government. It perhaps could open up a gateway for more orders from the government's end, considering the government is going so big in the railway space, and hence the stock is up at a fresh 52-week high, up 7.5%.
Thank you very much for that. Meanwhile, Umesh Chaudhary, the Managing Director and CEO of Titagarh Wagons, said this contract is valued at 12 to 13,000 crore rupees spread over the next 20 years, and the wheel sets are expected to start rolling out in the next 24 months.
The government is saying that we will assure you an assured offtake of 80,000 wheels for the next 20 years. You set up a plant, so your base capacity is filled up by us, and then you set up a plant wherein you can take care of the other private requirement and export wheel sets. So this is the tender. The total value of the contract that the railways will place would be about 12-13,000 crores, but the total project would be much larger than that, maybe more than 2 times of that. This is, we bid in a consortium. It's about an equal consortium.
Another stock which should have been on our radar today is PVR. That surged in trade after bullish commentary at the first analyst meet post its merger with Inox. Another stock that was buzzing in trade was also Voltas after the management commentary was positive again in an analyst meet. Surbhi standing by with the details on both these stocks. Surbhi.
Hi, thanks for that. So today I'll be watching at 2 con calls, PVR and Voltas. PVR Inox had held their first con call as their merged entity yesterday, and there the management has said that they will be adding 200 screens every year for the next 2 years, and they aim that the 40% of these new screen additions will come in the southern part of India. The management expects the EBITDA synergies to be in the range of 200 to 225 crores, and they expected to realize that in the next 12 to 24 months. In the longer term, they expect to drive synergies from additional F&B revenues, ad revenues, and also rationalizing their operational cost. They've also gone ahead and said that they will derive 5% of their spends per head from their food delivery business. Now, most brokerages have a positive view on the stock. CLSA and Nuvama both have a buy rating. The takeaways from the Voltas management meet was also quite positive. They have said that due to the early onset of summer, the room AC sales to channel partners in the month of Feb have been pretty strong. The secondary market share in the month of Jan has been maintained at 19%, and they expect to see further improvement in that. They may take price hikes in month of April depending on the secondary market demand. And on the EBIT margin front, they have said that they expect it to remain at single digits and they should touch 9% in the near term. On Waldbeck, they plan to launch more SKUs in the near term, and they expect the expansion of the distribution channel to increase by 1.5 times by FY24. Nomura has a buy rating on this stock with a target price of 1,083.
Surbhi, thank you very much for that. Let's get to the fifth headline for the day and the final one. Metal prices rise as investors bet big on demand from China. Steel prices hit an 8-month high. Back home, the Nifty Metal Index soars 2%. Manisha is here with the details.
It has been a good day for metals where we've seen some short covering and the buying also as the US dollar index continues to trade on a weaker note here. Well, if you look at the overall metals, the non-ferrous metals, copper, aluminum continued to do well. And in the ferrous space, steel was trading at an 8-month highs yet again, iron ore trading at a 7-month highs as well. And this also came in after Tangshan, which is a major steel producing province, also had to shut production due to severe pollution. So that led to steel prices trading higher. But apart from that, the investors also are betting on a strong demand coming in from China. All the economic data that we have seen come in for the month of Feb has been on the positive, some below expectations, but in positive nonetheless. So yet today we are reacting to the industrial production numbers, which are up to 2.4% for the month of Jan and Feb as compared to previous year. The retail sales data also came in 3.5% on the higher side, and the Chinese manufacturing data for the month of Feb has been at a multi-year highs, clearly supportive for the metal prices there. And then there is an expectation that China would have a mandate of further stimulus measures when it comes to consumption, infrastructure and construction, and that has been supportive. Also take a look at the kind of months we are in right now. From March to June is the time which is a peak demand season, and this is the time that metals are high in consumption and stocking. This is the time that infrastructure and construction also are in a very strong go. So metals clearly taking support from that.
Thank you, Manisha, for that. With that, it's a wrap on this edition of Markets Today. Thank you for watching.